man. So could we be in for a shock Fed flip-flop at the next FOMC? We are just days away from the November the 2nd FOMC meeting, and a shock flip-flop could be on the cards, and that could trigger us to cancel this bear market and start heading into the next bull market. As you guys know, I've been quite tentative to the downside. I've been talking about the fact that until we see either CPI start to come down, which it hasn't meaningfully, or until we get clues around a potential flip-flop, i.e. a pivot, things will not improve. But we are starting to see that. I've seen an interesting metric which I need to share with you guys, plus a bunch of interesting news items which are suggesting that maybe, just maybe, the Fed are looking to wrap this up and start turning the money printer back on again, or at least tighten less than they're tightening before. Guys, don't forget to smash that like button. Don't forget to subscribe. If you want to trade any of these moves, you can do so using BYBIT or BitGet. Links in the description. Now, as you can see, still on the side of the road. I'll be back in my office for you guys tomorrow, but still have to make sure I give you guys the updates. And what you could see, Bitcoin got a really nice run up here. As we see, everybody monitor this. We saw us run up to the 21,000, got some rejection, and now you can see we're cooling off a little bit. Do not be too concerned by this. What we're doing here is, if you look at the descending triangle, which we initially broke down from, collected support from the bottom of our channel, we worked our way back up. Do not be surprised if Bitcoin wants to test this for support, this horizontal level here at around 20,400. It's okay if we come down, test that for support. Ideally, we don't want to lose it, but you've also got the 20,000 level to bounce from support as well. So either of these situations allow us to continue to move to the upside once building some support. Think of it like scaffolding. You want to build scaffolding on your way up. If you just rocket straight up to the upside, it's easier to just collapse. If you do this, you're more likely to fall to the downside. So I'm happy that we're coming down, collect some support, and work our way to the next level, which is at that 22,000 mark. But what's interesting and what we need to cover off is what I'm seeing from the Fed. Yes, are we going to get this pivot? Guys, look at this. This is what's interesting. We got the negative CPI reading just a little while ago, the last CPI reading, and it wasn't great. We didn't meet expectations. And so on the day of the meeting, you saw a few percent, like almost 10%, start to price in 100 basis points. That then filtered out. We then saw that the market, 96% of the market, 99% at one point, had priced in 75 basis points. And I was in that camp. I was in that camp saying, you know what, 75 basis points, let's get it done. Let's carry on with these rate hikes. But then look what we've seen. We're now just days away, okay? We're now days away from this meeting on November the 2nd, as you can see there on the screen. And now 15% of the market has started to price in a 50 basis points. Where's this come from? And could this percentage get higher and higher heading closer to that day, right? We've still got a few days left. Could this start to tick higher? Can it get closer to 30%, 40%? And if that's on the cards, this could trigger the big run we were looking for on crypto. So remember, what I said was I'm expecting this to just be a relief rally, right? If we zoom up here to the weekly on crypto, all I'm expecting this to be at this point was a little relief rally. Let me just get a clean chart here for you guys, and let's bring out the EMA ribbon. I'm just expecting a move into our EMA ribbon, even up to 30, right? And then I expect the bulls to come back in. But this could change things. The difference between us just having a relief rally and then coming back to the downside versus actually flipping this weekly EMA ribbon to the upside and having a sustained move back to some interesting levels are the Fed, right? When we had our massive run up to the upside, why did we have it? Because the Fed were accommodative. They were printing money. There was an abundance of money in the ecosystem, in the economy, for people to invest in crypto. On the way down, what was this? This was fears of the Fed tightening and the Fed actually tightening, right? 75 basis points, tightening, hoovering up money from the economy. But now we're starting to hear things change. We're starting to hear that maybe at some point, whether it's the next meeting or if it's the one after that, are we going to see, because if you see here, the next meeting after is December the 14th, are we going to see a pivot? And you can see the markets are 50-50 on what to expect to that meeting, right? So that's what we're seeing, is we're just a matter of time now before the Fed needs to start tightening, whether it's Cathie Wood, whether it's other people. A lot of people, the UN, are saying that the US should not tighten so aggressively. You're at risk of not just driving the US into deep unemployment and a deep recession, but also causing issues for other less economically developed countries as well. So there's a lot of pressure on the Fed. Now, not to mention, that's not the only pressure. What other pressure are we facing, guys? We know that there's this, the US midterm elections, okay? We're not far away from the midterm elections, and guess what? Joe Biden's going to want things to look good. He's going to want a nice little healthy stock market, maybe a couple of days of rallying. It helps. People don't think this helps, but it helps. It helps in the mindset. People say, oh, things are looking a bit better. They feel a bit richer. Their portfolio's a little bit up. It can sway decisions, right? So that's another factor. Also, if you take a look at things, you got Janet Yellen coming out again. She wouldn't come out without being told by Biden to say she wants to enhance the treasury market. So in other words, to stabilize this volatile treasury market, maybe she's going to come out and start buying these bonds again, which is another form of easing of policy. It's putting more money in the economy. Okay, so what we're getting here is a real fundamental shift in the mindset of the US, and this is what we've been looking for a nice big move. Now, I don't want to get ahead of myself, but it's interesting. It's good that the debate is taking place, and it means we're closer to the end of this bear market than we are to the start, that's for sure. We're near the final innings of this bear market. You guys have made it through if you've been here, so congratulations. Give yourself one of these pats on the back, even if you're on the side of the road, and say, look, we need to navigate this. We might not get crazy or low prices. We may get wicks down, some sudden wicks. We may see that kind of a thing. But are we now going to come out of this? Are we going to see the final 75 basis points, or are we going to see 50 basis points? Here's another thing that's helping us understand is that the Bank of Canada came out yesterday, and they surprised us with a less higher than expected rate hike. So everybody's expecting them to do 75 basis points. They did 50 basis points as well. So we're starting to see that some are looking to pivot, right? Looking to start easing again, or at least not tighten as much. And that's the start of the pivot. That's them not being so aggressive and starting to loosen up. And the markets will react to that, and that could give us a nice move to the upside. Now, what are we seeing today? The reality of what we're seeing today, because this is me giving some premonitions about what I think is going to happen. But what we can see today proactively is that earnings were down, right? Earnings were down, big tech was down, Google struggled, Facebook struggled, we saw Microsoft give weak guidance. This is not good, right? But it is good for what we want, right? It's not good that earnings are down, but what it means is that if companies came in with good earnings, okay? Remember, you're damned if you do, you're damned if you don't. If company came in with good earnings, Jerome Powell and Biden would have been out saying, see, we're not in a recession, we're going to carry on increasing rate hikes. Right? So it's good that we're seeing this. We're seeing companies say, guys, you're killing us here. We're going to have a weak quarter next quarter. If they were coming in saying, oh, everything's rosy, no problem here, no issues with supply chains, we're seeing record revenues, we're good, Jerome Powell's going to carry on increasing his rate hikes. But now with the pressure, some of these biggest companies in the US, well, all of them struggling on the back foot, this is going to put pressure on him to say, you know what, maybe we are getting into a real recession. We can't avoid it and keep hiding behind this, employment number and say, oh, look, the employment market's fine and we need to get to work. So this is what I'm looking at right now here in the market. Pre-market down 0.6. S&P flat, Dow Jones 0.74, and as you can see, coming back into the Bitcoin chart, what are the levels we want to be watching out for? The first level you want to be watching out for is that retest of that 20,400 level. That's that white line here. Are we going to come down and collect some support? If we don't, we'll be looking at the 20,000 psychological level for us to hold up. If we don't hold that level, could be coming back to the bottom of the channel again. But right now, we do have some good movement behind us and some excitement in the market, which could help us move a little bit. If we now head into our daily chart, I do want to pull out a few other indicators for you guys, and let's just do that on a slightly different chart. Let's do it on this one. So this is the triangle you guys can see which we were breaking out from, and first price target you want to be looking at is always look to the left. We met the first price target, right? We broke through that first price target. Great stuff. Now you want to be looking at the one here, which is your 22,300 range at this pivot point. Then you want to be looking at the next pivot point to say, can we work our way towards that 24.5 to 25,000 level? That's going to be that W pattern. More excitingly is when we form that big W pattern. Remember the W inception I shared with you guys yesterday? That's what we're looking for. We got the big W. We've achieved the small W. Great stuff. There's your middle W. This is W inception. And then you've got your big W. That's what we're looking for here. Okay, guys? These double bottom patterns which create those reversals and help us get out. Let's also bring out the Bollinger Band for reference. And exactly as we predicted, the Bollinger Band constricted, it tightened, which normally means you're set up for a nice big move. Great stuff. We got a nice big move to the upside. But what you should always do is go up one time frame. Go up one time frame and look at where do we stand. Even though we've had that breakout, what's the weekly telling us? And what the weekly is telling us is we're coming up to the middle line of our Bollinger Band, which can act as resistance. So you've got to be careful. Do not be surprised to see a little bit of a bounce down. Maybe come collect some support around here before trying to work to the top side of our Bollinger Band. Currently, the top side of our Bollinger Band is around that 23,800 level, which is where we want to work our way towards. And that is where this medium-sized W pattern is going to take us as well. That's that pattern there. Okay, so that's what we're watching out for here on the Bollinger Band. If you look at the, let's also bring out the VPVR. you can see we're in a really important level of support here with key volume. If had we have lost this, things could have got really painful down to 17,600 and even worse at 14,000 level. So really interesting to see that we really did hold up some nice support here for now. But the key is, can we go post that higher high? Until we get above this point here, things still remain in the controls of the bears. So where do I stand right now? To summarize, the bears are still in control of this market. Let's understand that. But what we can understand is we are coming to the final innings. We are testing the patience and the strength left in the bears, right? Sorry, the bears are in control. Hopefully I said that correctly. And we were testing their patience. And now, if we can see signs of this pivot happening, then things can really start to improve. And you'll see it'll move very, very quickly. I mean, if you take a look at Fear and Greed Index today, you can see it sitting at 32, right? We're out of extreme fear really, really quickly. And this will climb to 40, 50 very quickly as FOMO starts to kick back into the market. Hope you guys enjoyed this update. If you appreciate this type of input, even on the roadside, smash up likes and subscribe. As always, if you're going to buy these cryptocurrencies, BYBIT, BitGet, links in the description. Thanks for watching, guys. Go watch this video here, and I'll see you in the next one.